In 1929, the world believed it had figured everything out. The stock market was rising, businesses were booming, and millions of people thought the good times would never end. But in just a few days, everything changed. Fortunes disappeared, banks collapsed, and an entire generation was left asking, how did this happen? To understand the crash, we have to go back to the 1920s, a time of optimism. In the United States, companies like Ford Motor Company were revolutionizing production. Cars became affordable. Factories became faster. People were buying more than ever before. And then something new happened. Ordinary people started investing in the stock market. You didn't need to be rich anymore. With a small amount of money, you could buy shares in companies and watch them grow. Or at least, that's what everyone believed. But the market wasn't growing because companies were strong. It was growing because people believed it would keep going up. Speculation took over. Investors borrowed money to buy stocks, a system called buying on margin. This meant you could invest more money than you actually had. As long as prices kept rising, everyone made money. But underneath, the system was fragile, like a balloon, being filled more and more with nothing solid inside. Then came October 1929. Panic began to spread. Investors started selling, prices dropped, and suddenly everyone wanted out. On a day that would be remembered as Black Tuesday, the market collapsed. Billions of dollars disappeared, not just numbers, real savings, real lives gone. But the crash was only the beginning. Banks had invested heavily in the market. When stocks fell, banks lost money, and when people heard this, they rushed to withdraw their savings. This caused bank runs. Thousands of banks closed. One example was Bank of the United States, which collapsed in 1930, taking millions in savings with it. People didn't just lose investments, they lost everything. As banks failed, businesses followed. Factories slowed down, production dropped, companies couldn't survive. Many disappeared forever, but some adapted. Ford Motor Company struggled, but survived. Meanwhile, companies like General Motors adjusted their strategies, focusing on different price ranges, and managed to continue. The difference was simple: adaptation. Those who changed survived. Those who couldn't faded away. But the real impact wasn't just economic. It was human. Millions lost their jobs. Families lost their homes. Hope became uncertain. People stood in long lines, waiting for food. Entire communities changed. The Great Depression wasn't just a financial crisis, it was a human crisis. So what did the world learn? Governments realized that markets need rules, banks needed protection systems, and economies needed balance. These lessons shape the future, even today. When markets fall, people remember 1929, and systems are in place to prevent the same collapse. But the question remains, could it happen again? The Great Depression began with hope, turned into fear, and changed the world forever. It reminds us that growth without stability can be dangerous, and that behind every number, there are real people, real lives, and real consequences.